Welcome to Financial Education for the Nation, and my name is Warren Shute. In the press and the media at the moment, we're talking about a rise in interest rates. So I want to spend just a couple of minutes talking to you about how that will affect you. The Bank of England Monetary Policy Committee meets 8 times a year, and their responsibility is to set interest rates to control inflation. That's their outcome. It's not to make it more difficult for you to buy your first home or to benefit you for having savings. It's really just to control inflation. So I want to cover the 3 main areas where it might affect you. First being savers, second being property homeowners, and the third being your retirement or pension fund. So a rise in interest rates for savers, it's good news. We're going to see the banks possibly carry that through. So we'll see bank deposit rates slightly increasing. So if you have money on deposit, it's going to slightly improve. You're not going to see a massive jump because I think we're going to be looking at small increases, but it's good news. Second is property prices. If you think about it logically, if it's more expensive to buy a home, less homes are likely to be sold. Therefore, we're going to probably see a further slowdown in property prices. We've already seen this with the change in stamp duty. So I think this will compound the effect and we'll see a prolonged period of maybe slower property price growth. The last area will be your retirement fund or your pension. Now, typically there are 3 areas, 3 investments within a pension: fixed interest, property, and equities. In rising interest rates affect all 3 slightly differently. Fixed interest, generally it's a negative. It will slow or even give a negative return on fixed interest. Property, as we've just spoken, it will generally slow the rise in property prices. And finally, equities. Equities actually bucks the trend, and with rising interest rates, you generally find equities buck the trend and will just carry on growing. And that's generally because companies can then pass on a higher price increase and therefore make higher profits. So it makes it more valuable. So overall with your pension, I think you're going to be probably neutral. So we've got a rise in interest rates is going to benefit savers, probably slightly decline property prices and have neutral on the retirement market. So don't get freaked out. We're talking about a small interest rate rise. It's not really going to have a massive effect on you. I just want you to focus on your long term. Hope this has been helpful. My name's Warren Shute and this is Financial Education for the Nation. Thanks for watching. Please connect with me on social media: Facebook, Instagram, LinkedIn and Twitter. I'd love to hear your feedback.